It's hard to escape all the chatter about AI potentially being one big financial bubble. And there's good reason to worry about that. So much of the stock market's growth is currently tied to AI companies. And the ripple effect of a potential bubble could be wide-ranging. So today, I'm going to try to burst through the bubble talk with my guest, Joe Castaldo. Joe writes for the Globe's Report on Business, and he's been reporting about what is actually going on with the AI industry. I'm Cheryl Sutherland, and this is The Decibel from the Globe and Mail. Hi, Joe. Thanks for coming back on the show.
Thanks for having me.
So I feel like everywhere I turn right now, I hear talk about this AI bubble. Why are we even talking about this right now?
I think at one level, people just love talking about bubbles. Like, it's just kind of exciting in a weird way. But more to the point, like, there's been talk of an AI bubble pretty much since ChatGPT came out at the end of 2022. Like, very shortly after that, you had people who work in AI or in the financial community just pointing out, like, hey, there's a ton of hype around how this technology is going to change the world. It's very expensive to build out, and we don't really know what the financial return from this will be. So those are kind of all the elements of a financial bubble right there from the get-go. But since that time, the money pouring into the AI sector to build out data centers specifically is just huge, right? It just keeps getting bigger and bigger. And those questions around, well, what's the return from all this are still there. We still don't know. And then even more recently, some of the big AI companies are entering into financial arrangements that are novel or unusual. And there are a lot of questions about that as well. So I think just the questions around hey, is AI going to pay off are just getting louder and louder and louder.
All right. And you mentioned a couple of things that we're going to get into in this episode. Before we dive into what has been happening in the industry that is causing people to toss around the B word, I want to establish the scope of this issue. How much of the economy is riding on AI's growth at this moment?
A not insignificant amount. So if you look at the stock market, there's one study showing that 30 AI-related stocks make up something like 44% of the market cap of the S&P 500.
That sounds like a lot.
It is a lot.
Yeah.
Yes. So there's the stock market aspect. And then because AI requires data centers, there's a lot of data center construction happening in the US. That's impacting the economy there. Again, up to half of GDP growth in the US in the first 6 months of the year is tied to AI.
Wow.
So it's having a real impact in the economy and in the stock market as well.
Mm-hmm. And as you mentioned, the industry has seen quite a bit of hype and also a lot of investment. How much money is being poured into AI investments right now?
So this year around the world, an estimated $590 billion, which is a lot. That's more than global oil investment by a few billion. If you adjust for inflation, it's well over the cost of the Apollo project to put a man on the moon, more than the Marshall Project to rebuild Europe after World War II. There's estimates that the amount of money required to build out data centers and energy infrastructure to power those data centers over the next few years is in the trillions, $5 trillion.
Astronomical.
Yes.
Yeah. Yeah. And you mentioned $590 billion here. That's a lot. But are these companies that are involved in this, are they making money?
Not really. So, there's different companies in different parts of the AI ecosystem. So, companies like Google, Microsoft, Meta, yeah, they're making money. They have very established businesses. OpenAI, however, around which, so much of the AI ecosystem and hype revolves, no, it's not making money. The company has said, they're on track for 20 billion in revenue this year, which is substantial. But, they've also said their sort of cumulative cash burn out to 2029 is in the order of $115 billion. And they have made spending commitments to build data center infrastructure totaling $1.4 trillion in the next few years. So there's a huge gap there in terms of what they're bringing in, what they're committed to spending, when they can turn a profit. Just a lot of questions around that.
Yeah, I think the important point here is that revenue does not equal profit, right? So even if these companies, some of them, are making money, that does not equal a profit in the end.
No. And, tech companies can be unprofitable for long periods of time, for sure. But the scale of this one is really just eye-popping, I think. And if it's not making money internally, it has to, raise external capital. And so far, it hasn't had problems doing that. But maybe it does become more problematic. Maybe they can't get the funding they need. Maybe they can't get the funding they need on the terms that they want. Like OpenAI is reportedly considering an IPO next year, which could raise more capital. But it all remains to be seen.
Yeah. So an IPO meaning that they would go public.
Yes, you could buy shares in OpenAI.
Right. So we're talking about revenue and profit, and there's also this thing, value, right? How is the value of these companies, how is that different from their revenue?
So the end customer, so like your company that has bought this AI tool to, automate contracts or write legal contracts or handle customer service inquiries, like what is the return from that? Is it making things more efficient? Is it increasing productivity? Is it saving costs? Does it mean they can lay people off? Like part of the value of AI is like replacing human labor, unfortunately.
Yes.
Right? So like, can companies replace people with this technology? That's the value that we're talking about. And it's unclear what that is right now because generative AI, it's still new. Companies need time to figure all of this out. And there's basically conflicting studies right now. Some showing a very small percentage of companies are seeing value, others showing, a larger percentage, but it's still an unknown.
I'm curious, like how much debt are these companies carrying?
Well, it depends. So the big tech companies like Meta, Amazon, Microsoft, Oracle, they've been funding this data center expansion primarily with cash from their balance sheets. That's starting to change because the scale is so large. There's more acknowledgement of risk that they're starting to take on debt, which is a change. Then you have another layer of companies, like there's one called CoreWeave. It buys chips from NVIDIA, sets them up in data centers, and like sells access to these chips to companies that want to, build an AI model, run an AI application. It's a multi-billion-dollar company, but it's very expensive to do. Chips are expensive to buy and operate, and so CoreWeave has to borrow money to do this. It's taken on a lot of debt. I think it has like $14 billion in debt. Some of that debt carries really high interest rates. So far this year, it's paid over $800 million in interest. So by the end of the year, it could be $1 billion in interest.
Wow.
It's losing money. It's just an example of, hey, this is a really high cost business and we're kind of like waiting for the return, right? Has a lot of debt, spending a lot of money, no profit yet to speak of.
Yeah. How are companies able to carry all this debt if they don't have a ton of revenue right now?
Because investors are willing to give it to them because they think AI is going to pay off, right? If you believe that, then maybe CoreWeave is a safe bet because doing what it does is complicated. You need expertise. CoreWeave has it. It has good relationships with all of the companies that need access to these chips, like OpenAI. So if you believe we need AI, AI is going to pay off, AI needs lots of data centers, then you might want to bet on CoreWeave.
So how are these companies structuring their debt?
Some companies just issue bonds in sort of like the ordinary way that companies do. Meta has chosen a different way recently. So it has a partnership with a private equity company. And together they formed a separate company that raised $27 billion in debt for a massive data center that Meta is building in Louisiana. And it's interesting because like that debt doesn't show up on Meta's balance sheet at all. It's like Meta doesn't have the debt because it's held by this third entity that they formed in which Meta owns a stake. So it's great for Meta because it doesn't have to carry that debt on its balance sheet. It doesn't affect its credit rating or its ability to raise capital elsewhere. But it's raised a lot of eyebrows because why are they doing this? Is it so risky that Meta doesn't want this debt on a balance sheet? It's sort of like an acknowledgement that like, yeah, this is risky and the company doesn't want to be on the hook necessarily if something goes wrong. And also when you have these off balance sheet arrangements, there's just like less transparency around it. It's harder to figure out what's going on and where the risks are. And given the scale of infrastructure that is believed to be required for AI and the amount of money it will cost, analysts are saying other companies are going to do the same thing, right? They're going to start these, special purpose vehicles to hold debt off their balance sheets.
We'll be right back. So, Joe, we've laid out kind of like the hype around AI, and we hear a lot of talk about what's happening in AI right now as being similar to the dot-com bubble of the late 90s and early 2000s. I want to actually sort out how accurate these comparisons are. So let's start with the similarities. What parallels are people seeing?
So a big one has to do with circular financing.
Okay.
So it's going to take some explanation.
I'm ready.
Okay. So in September, NVIDIA, which is, the dominant maker of GPUs, which are the chips necessary for AI, said it would invest up to $100 billion in OpenAI as OpenAI builds out data center infrastructure over the next few years. And that's interesting because OpenAI is obviously a huge user of NVIDIA chips. So it looks like you have the supplier investing in their customer. So the customer has money to buy the product. Now, NVIDIA has downplayed that and said, this allows us to work more closely together to develop the technology that OpenAI really needs. And plus, it's a financial investment. OpenAI is a once-in-a-generation company that's going to generate, extraordinary returns. So, now we have a piece of it. But it's raised a lot of eyebrows because that's what happened in the dot-com era as well. So in the late 90s, early 2000s, the internet was the hot new thing. And to connect the world, you need infrastructure. So you need fiber optic cable and routers and stuff like that, which is expensive to build. So what happened is you had companies like Nortel in Canada, which makes the equipment, providing financing to the companies that buy the equipment and install it, right? So
hence the circular.
Yes, the money just goes
around the circle
and around. And that's not necessarily economically sound. And what happened in the dot-com era is they just built too much. There was too much fiber optic cable, way ahead of internet demand. And so the whole thing collapsed, right? These carriers that weren't making money, relying on vendor financing, they couldn't pay their debt. Some of them went bankrupt. Companies like Nortel saw lower sales because they didn't have carriers to provide vendor financing to buy their stuff anymore. So the whole structure unraveled. It's not dissimilar to what's happening now between NVIDIA and OpenAI. It has another similar agreement with Anthropic, which is a competitor to OpenAI. Oracle, has its own kind of circular deals involving OpenAI. So there's more than one.
But is this just happening with NVIDIA and the AI companies that have these kind of large language models like OpenAI, or are they also doing this with smaller AI companies?
Yeah, so there's a report from Veritas Investment Research in Toronto where they found some 80 investments that NVIDIA has made in the past couple of years into a customer or an AI startup that would need compute. And from NVIDIA's perspective, these are just venture capital investments, right? There's a promising company, let's invest, we'll get a return someday. Veritas has a different view of that. Their argument is NVIDIA is already such a large company, it doesn't have to be doing this. Its focus should be on revenue growth. So in their view, these investments are more akin to vendor financing, helping a cash-strapped startup obtain funds so they can spend it on NVIDIA compute. And what NVIDIA has said is well, we don't require companies we invest in to use our technology. But the funny thing is they don't have to because there just aren't many alternatives out there. NVIDIA is the only game in town.
Yeah. So if NVIDIA is having to finance its customers to buy its GPUs, What should we make of the record revenue of $57 billion it reported last week to investors? Like how real is that if some of that demand is partially funded by NVIDIA?
It's not really known. I think analysts have tried to parse that, like how much of NVIDIA sales are tied to some of these circular financing deals. Mm-hmm. But the earnings, you're right, the earnings were great. The CEO of NVIDIA was saying, oh, there's lots of talk of a bubble. Like, we're not seeing that here. Demand is great. And that's true, it is. But it's interesting that, NVIDIA's stock is still down from those blockbuster earnings. Mm-hmm. I think because investors are asking a lot more questions about AI.
Interesting. So we talked about how the AI hype is similar to the dot-com bubble, but what makes the AI situation not like the dot-com bubble?
Yeah, there are differences. And for some people, those differences are more important than the similarities. So one is, the biggest buyers of NVIDIA GPUs are companies like Microsoft and Meta and Amazon, and they're doing it either with cash or in some cases some debt, right? But they are existing profitable, hugely profitable companies. They don't need vendor financing for this.
Okay.
So that's one difference. Secondly, the dot-com era had a lot of internet startups that went public that didn't have business plans, didn't have revenue, but had big valuations. Today, AI startups tend to be privately held. So there's arguably less risk in the stock market. And thirdly is demand, to go back to NVIDIA's earnings. In the dot-com era, there was too much fiber optic cable. Today, it's like we can't get enough data centers. There's not a lot of, I would say, like objective data on that. We have the company's word for it that demand for GPUs is strong, or when a data center comes online, like all the capacity is used up. So there would seem to be demand today. The kind of flip side to that, though, is if you look at past financial bubbles, that demand can be a bit misleading. Mm-hmm. So in the dot-com era, companies were still saying things are great, we're building, we have sales, but stock prices had started to decline like well before that because investor sentiment had changed. So today, demand looks really strong for all of this, but the past month, stocks tied to AI have been falling.
Okay. I want to shift gears here a bit and talk about if there is an AI bubble right now, what would trigger it bursting?
So I asked that question a lot, and it seems like the simple answer is anything or nothing at all. There's a ton of hype and excitement for AI right now. But if the returns take longer or it's just more challenging than people are assuming, then maybe investors get impatient and they start to sell their shares because AI stocks have done fantastic. And, everybody starts to cash out. And that triggers a, maybe not panic, but just a long, slow sell-off until AI starts to deliver. I mean, that's one possibility. And, maybe if OpenAI goes public and people get a look at its finances, maybe they're terrified and start to sell. Maybe it has difficulty, raising capital. I think markets are so twitchy right now that any statement could spook them. OpenAI started talking about government backstops for data centers recently, and they tried to walk it back. But I think that scared people because it's well, if this is so certain, if AI is so great, what do you need a government backstop for? Mm-hmm. So it could be anything.
When will we know when it's happening?
Stock prices would decline first, and then you might see companies, tied to data centers, maybe projects get delayed, maybe they get scaled down, maybe they're not hitting analyst expectations anymore. Maybe a company like CoreWeave has trouble making a debt payment, things like that.
Aren't stock prices declining right now, though?
They are, yes.
What do you make of that?
So the bubble talk has been relentless, probably since late September, October, both in the media and in the financial community. And even the leaders of big AI companies have acknowledged that it's possible there could be a bubble. But, they kind of gloss over it and look to the future. So I think because there's so much talk about it, there's just a lot more scrutiny on these financial arrangements and how sound are they, and like how strong is the demand, and what is the payoff of AI? Those questions just have led to doubt and skepticism, and that's being reflected in stock prices.
Okay. So if the bubble were to burst, what would the fallout be?
It could be bad, according to some people. So we mentioned the impact of AI on the stock market, making up a large chunk of the S&P 500. So if there's a bubble that bursts and AI-related stocks decline, like that would hit the stock market in a big way, even if you're not like directly invested in Meta or whatever. A lot of people own ETFs or index funds, so that would take a hit. And the stock market has an impact on consumer spending as well. Because of AI, the stock market in the US has been doing well, and consumers feel wealthy because stocks are doing well, and they're more inclined to spend. That's the wealth effect. That reverses if there's a correction. So that would hit consumer spending. We mentioned the impact of data center construction on GDP as well. Like that would wane, so that would hit the economy. So there are some analysts who say it would trigger a recession in the US. And Canada, we're somewhat lucky in a sense that a lot of the AI hype is concentrated in the US. But as much as we are trying to decouple from the US economy these days, we're still really tied together. So there would be some impact here too.
Yeah, usually what happens there definitely impacts what's happening here in Canada.
Yeah.
So just to end here, Joe, we've been talking a little bit in hypotheticals about if there is a bubble and if it pops, but I do have to ask you, the one question we've been kind of dancing around, is AI a bubble?
I knew this was coming.
I had to ask it.
Of course. My answer probably isn't very satisfying, but I will say if you look at history and what happens anytime there's a new world-changing technology on the scene, like railways, electricity, the internet, there was a bubble. It's just human nature to get really excited, hype things up, look for opportunities to get rich quick, pile in with the herd mentality and drive a bubble. And then it ends in tears. And then in the long run, things recover and the technology proves itself out. I don't see why AI is any different from all of those technologies. It has all of the makings for a bubble today. You could argue, is there one now? Could one form later? But to think that, markets are going to be perfectly rational about all of this just seems unlikely to me. And maybe if you look at the stock market, maybe some reality is already setting in.
Joe, always great to have you on. Thanks again.
Thanks.
That was Joe Castaldo, a staff reporter for the Globe's Report on Business who writes about artificial intelligence. That's it for today. I'm Cheryl Sutherland. Our producers are Madeline White, Michal Stein, and Ali Graham. David Crosby edits the show. Adrian Chung is our senior producer, and Angela Pacenza is our executive editor. Thanks so much for listening, and I'll talk to you soon.